Recent demand for guaranteed income solutions has sparked a surge in annuity purchases over the past few years. According to LIMRA research, total annuity sales in the U.S. topped $430 billion in 2024. But let's take a step back here. What exactly are annuities, and are they a good investment vehicle for you? Here with more, I'm joined by Michael Downing, who is the Athene Chief Operating Officer. Quick disclosure, Athene is a subsidiary of Apollo Management, Yahoo Finance is Yahoo's parent company. Great to have you here on set with us, Mike. Let's start with the basics. Just what is an annuity and how do they work?
Yeah, so at a general sense, an annuity is just a general term for a collection of retirement solutions. Mm-hmm. They're all generally trying to provide guarantees. And the way they fit in is, if we think about your average retiree who's saved for 30 or 40 years, mm-hmm. their core need is to have guaranteed income for the rest of their life.
Right.
So one, they want a guarantee. Two, they want to have confidence they're not going to outlive their income. And three, they're going to want to make sure they feel comfortable that they can weather downturns, whether it's an equity downturn or a spike of inflation. So the way they work in terms of the guarantees, the basic types are strong rate of return for a fixed number of years, mm-hmm. guaranteed payments for your entire life, regardless of how long you live, principal protection with potentially some equity-like upside, and all of them are built within a tax-deferred wrapper.
Right.
So they both protect and preserve wealth and help retirees retire with confidence.
Now, annuities may not be for everyone, so what are some of the limits here that we should also be keeping in mind?
Right, so I think the key thing with annuities, I talked about there's a collection of different types of tools.
Right.
They should generally be an anchor of almost any portfolio in terms of the preservation of wealth. And so the things that customers should look at is the type of protection they need. So one, is it guaranteed return on your investment? And that's what some simple annuities provide, a guaranteed, say a 5% yield for guaranteed for 5 years. Or is it you still want upside of the market, but want to protect the downside? That would be an example of a fixed indexed annuity.
Right.
And then there are others that allow lifetime income withdrawals as well as having liquidity. So it's really a matter of trying to find which one is appropriate for your portfolio.
And what level of liquidity you need as well.
That's right.
And so what is the sweet spot for an age that you should be considering an annuity?
Yeah, so I'll talk about in the range of our target customers. Sure. So with Athene, last year we issued about $35 billion of annuities. Wow. In this rising market. And our customer base on average ranges from about age 55 to about 85. Mm-hmm. And certain products are really popular at all ages. The simple guaranteed rate to term is popular across the spectrum. Other types like fixed indexed annuity, which promise principal protection but have equity upside similar to an S&P upside, but the downside protection tends to skew younger. So that might be more in the 55-year range. And
so with that in mind, you talk about fixed indexed annuities. It seems like, especially for a lot of the younger investors that could eventually opt into or add in annuities to their portfolio as well, that's a way to almost take the thinking that might already exist from an ETF perspective and then layer that into an annuity perspective. I mean, I may have that incorrect.
You have that exactly right. So a common, like within the employer space, a common structure are these target date funds, yeah. which basically automatically adjust your risk profile as you get older, but they're just targets. None of them have guarantees or boundaries. The fixed indexed annuity provides guardrails that are guaranteed by the insurance company. So it's exactly that, Brad, is you can invest in these in a younger age, get all the upside protection, continue to get the tax deferral, and then when you actually need income, pull the income out.
Is there a sweet spot in kind of percentage return that you should be looking for in your annuities?
No, it's really just a matter of looking for annuities compared to alternative investments. So right now, again, in the current rate environment, you can get a guaranteed return of about 5%. You can get, in terms of a fixed indexed annuity, principal protection upside of as much as 10 or 15%, which is very strong, but it's all against the backdrop of alternatives. So at the current rate environment, annuities are a much stronger alternative to CDs because they offer the tax deferral, they offer liquidity to the extent you need liquidity for investment. And then when you look at equity alternatives with a high volatility, having that principal protection for most retirees makes a lot of sense.
Yeah. Michael, thanks so much for breaking this down for us.
Thanks for having me,
Brad.
Appreciate it.